Hey guys, I'm on the road here this week, but I wanted to just go over a really important concept. I talk about this concept over and over again, and that is basically fading or going against very, very steep slopes, right? So when a stock, a commodity, currency, whatever it is, goes from very steep to vertical. And I just wanted to show you another example. If you go back, I think it's 2 weeks ago, we talked about here actually in real time on the videos and on YouTube and in our video database, we talked about a stock that had done exactly that and that it was time to fade it or go short, and that stock is Roku, R-O-K-U is the ticker symbol. The stock has since basically fallen 0%. To be clear, I'm not here to stand on a high horse about this. I'm trying to tell you this so you can profit from this and not try to chase these things. So let's have a look at the chart real quick, and then we are going to have a look at how maybe what to do now and that kind of stuff. So let me get this chart in the middle of the screen. Let me quickly get the little stand here ready. I know some people are probably hating this right now because it's shaky. Well, it is what it is. Deal with it. All right. No. So here's the chart of Roku, R-O-K-U, and this is sort of the longer term perspective. I mean, longer term. The stock only went public in 2017, right? Yeah, 17. So let's just kind of put this in perspective, and you can see exactly this phenomena happening here. Steep slope that goes vertical, literally vertical, and the stock went vertical, 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 vertical until it just couldn't, until there's no more buyers left. And the buyers completely got exhausted at maximum overbought, which is where from a momentum perspective, the stock was just in uncharted territory. So what happens then? What happens and how do we know when a stock gets to such extremes and when it's time to short it? Well, first of all, you don't buy it anymore even when it goes to like these points here, right? And when it goes vertical like this, you just don't buy it anymore. Yes, you would have missed out on upside, but at the end of the day, more importantly, even if you bought it here, you now right actually below where you would have bought it. So there's really, really important things. Now we have a very specific candlestick pattern, which it takes into consideration candlesticks, trend, and momentum that I like to use for this. That I like to look for. And in this case, it's this sort of engulfing pattern. It's not just that. There's an algorithm embedded here with trend and momentum. But when this kind of thing happens, and we have a specific indicator for this, it's time to get the hell out, or maybe short, or even buy puts on it. And that's basically what happened. The stock took, and this was a very sharp ascent, but it took several weeks to go up. It only took 2 weeks to go down. It's now back where it was in mid-August. So, what goes up must come down is I guess is the theme here today. And so that's what the deal is here. Now, want to say one more quick thing. We are this week going to have a special webinar on something that I would urge everyone to attend. And it has to do with what I consider to be the best, but also the best trade in the sense that if you take into account the trend and the basically lack of volatility. You can have a great trend, a great trade idea, but if it's very, very volatile, it's very difficult to stay in it. This is a low volatility, strong trending opportunity. This is a trade that I see a lot of my hedge fund colleagues doing right now. This is not very well advertised, but the retail community is probably largely, and I mean largely, 99.9% unaware of this thing. Sign up for the webinar in the link below, and I'll see you guys later on this week in that special presentation.